Hello, everyone, and welcome to our exciting lecture series on managerial accounting. And I'm your instructor, Jamal. Hi there. Okay, so before officially, starting this lecture, so I have pasted a couple of practice questions regarding CVP analysis. So we're gonna go through first these questions, and then we're gonna start a new chapter. Okay. Here is practice question for cost volume profit analysis. So this question is from your chapter 6, exercise 6.6. So I have pasted its solution on the next slide. So I just want you to just pause the video here and try to solve this question and then compare your answers to the question answer that is pasted on the next slide. So here is the solution. Just compare your answer here and try to find out anything that you missed or not. If you have a clear answer that match here, you are in a good shape. If not, then please do write us on our Blackboard discussion forum under week 2 discussion, and you can write us on WeChat group, and we can also discuss in our live Zoom tutorial or ambiguity meeting session that is going to be held, and I'm going to upload the schedule on our WeChat group. Here is another practice question 6.8. Just pause the video here and try to solve it by yourself. The answer is on the next slide. Here is the answer. Match your answer here. And if you still have any question, please do write us, or we can discuss this on our Zoom live discussion. Okay. This is another 6.14, and you have to find out the missing values. The answer is in our next slide. So I just want you to just pause the video over there and try to match your answer here. And this is our last practice question, that is 6-16. And I just want you to pause the video and try to solve it by yourself. The answer is on the next slide. Here is the answer. You can match it. If you still have any question, so we can discuss this in our Zoom live discussion, or you can post it on our Blackboard discussion forum and our WeChat group as well. So here it is. Today we are starting chapter 7, which is variable costing, a tool for management. So there are two general approaches that are used for valuing inventories and the cost of goods sold. One approach is called absorption costing, which is generally used for external reporting purposes. The other approach called variable costing, and it is preferred by some managers for internal decision making. So we have absorption costing and we have variable costing. So that absorption costing is used for external reporting, and that variable costing is used for internal reporting. So variable costing must be used when an income statement is prepared in contribution margin format. That is very important. So basically this chapter shows how these two methods differ from each other. Which methods? We have absorption costing method and we have variable costing method. Okay, so let's discuss our first learning objective, that is explain how variable costing differs from absorption costing and compute unit product cost under each method. So let's explore further. Let's talk about absorption costing. Absorption costing is also known as full cost method. So absorption costing treats all the cost of production as product cost, regardless of whether they are variable or fixed. So basically, there is no distinction between variable and fixed cost. So absorption costing is not suited for our cost volume profit analysis. Plus, under the absorption costing, the cost of a unit product consists of direct material, direct labor, and both variable and fixed manufacturing overhead. Plus, we treat in absorption costing all the variable and fixed selling and administrative cost as period cost, and we deduct it from our revenue as incurred. Right? So let's move towards the other, that is variable costing. Whereas variable costing, which we also call at direct costing or marginal costing, it treats only those costs of production that vary with the output as product cost. So this approach basically merges with the contribution margin income statement, and it supports our CVP analysis because of its separating variable and fixed cost emphasis. Right? So this is suited for a CVP analysis. Right? So here the cost of a unit of product consists of direct material, direct labor, but only variable part of manufacturing overhead. And then fixed manufacturing overhead, and both variable and fixed selling and admin expenses are treated as period cost. Right? So overview of absorption costing and variable costing. So here absorption costing treats all the direct material, direct labor, and both manufacturing overhead, which belongs to variable and fixed cost, both variable and fixed manufacturing overhead as product cost. Whereas variable costing only consists that product cost only variable part of manufacturing overhead as a product cost. Right? So we can say that variable costing is direct material, direct labor, and variable manufacturing overhead as product cost. Whereas absorption costing also consider direct material, direct labor, and variable manufacturing overhead, but it also add fixed manufacturing overhead as a product cost. Right? Whereas for the period cost, let me just remove it here. The period cost here is the variable costing consists period cost as fixed manufacturing overhead, variable and fixed selling admin, right here. But absorption costing consists only variable selling and fixed selling and administrative expenses as a period cost. So when it comes to a product cost, right, so which one results in a lower product cost? Variable costing. When it comes to the period cost, whichever results the lowest period cost? Absorption costing. Right?